What's going on, traders? Hope everybody had a wonderful Thanksgiving and enjoyed time with friends and family. We've all got a lot to be thankful for, and I certainly am thankful for you guys for joining me on these videos as we navigate the markets together. I really appreciate all of the likes, comments, and subscriptions to the channel, and that really means a lot to me. So, wanted to give a special thanks, as I always do, to my supporters. All right, so with that out of the way, we're gonna go over some charts and analysis here, and see what we can take away for the start of the week. And of course, this video is for educational and entertainment purposes only, so in no way should be viewed as financial advice. First things first, let's take a look at the economic calendar for this week and see if there's any major events that we want to pay attention to. So let's get into that here. Economic calendar here provided by MarketWatch. So we'll pull this up for us to view together. Not too much on Monday, the 27th, but we have quite a bit of speakers here on Tuesday, the 29th. We have Waller at 10:30, consumer confidence. Okay, just another data point at 10 as well. Excuse me, now Waller's at 10, and we have Goolsby at 10 o'clock, Michelle Bowman 10:45, Barr at 1:05, and then Barr again at 3:30. So we want to pay attention as we run through the gauntlet of speakers there on a Tuesday. Wednesday, the 29th, we have GDP coming out at 8:30 before the market opens. We have Fed Beige Book at 2 o'clock, and then we have a Fed speaker, Mester, at 1:45. Want to keep an eye on that as well. Thursday, the 30th, we have initial jobless claims coming in at 8:30. PCE index, core PCE, all coming in 8:30 as well. And then at 9:05, we have John Williams speaking, New York Fed president. And that should do it for the rest of the day. Pending home sales shouldn't really move the market too much, but that is also at 10 o'clock. And then the start of the month. Wow. Here we are, December, and kicking it off. And we have Barr speaking once again, but at 3 a.m., so don't have to worry about that. ISM manufacturing coming in at 10 o'clock, and we have Goolsby speaking at 10 o'clock as well. And it looks like Powell speaking there at 11. And then we do have Fed Chair Powell and Fed Governor Lisa Cook speaking to local leaders in Atlanta at 2 o'clock. So quite the week for the Fed speakers, and we just want to watch out for any potential tape bombs, especially as we have some comments going to be rolling through from Powell on Friday. So there you have it. Let's now start to look at some charts and see what we can take away from our different data points that we like to look at, and what we could potentially expect coming into the market, and see where we may want to engage the market and manage our risk. All right, so we're starting off here with the weekly chart. And we continue to drift higher now, 4 weeks in a row of upward momentum coming into the market. And as we continue to make higher highs here, we have not yet in the trend sequence still made a higher low, right? So I am waiting really for that to happen. As far as swing trading, which I don't do that much of, but if I was going to be doing swing trading, we have not seen really that proper risk to reward as far as a higher low being put in the trend sequence. Now, of course, that doesn't necessarily have to happen, right? But just normal basic price action, that is what we would want to see to really signify a healthy trend in the market. And now this has just been 4 weeks of straight upward momentum for the bulls. And there are a couple of areas now that I'll be watching for those potential higher lows to be put in, or structural retests. And right now we're also, we got over the week of the 28th back in, when was this, June. We've got over that high, just a little bit, not completely convincing. That's around, we're about $2 over that. So that was around 453, 45 thereabouts. And that is encouraging, closing over this area here for sure. But you can see here it's not really a convincing close for me yet. And we obviously had a holiday week, so the volume this week was certainly diminished as we came into Thanksgiving. But now with this week, we should see a return to normalcy, and it will be very interesting to see what we get. So I still am waiting for this trend really to correct itself, just in the fact that we need that, or we don't necessarily need it, but as I was mentioning, healthy price action would really say we should have a higher low come into the sequence before we could potentially continue our move up into the end of the year. So, where are some key areas that we want to be watching, right? Well, the first thing is going to be a potential retest, right? And we're right above it right now. We did close above it, but we could even still, and this would be normal, healthy price action. Doesn't mean that that the trend is broken in any way. But remember, if you recall, during the start of September, we were watching this double inside bar right here, right? And I'm going to try to obviously highlight that for us right here. We were watching this double inside bar, or excuse me, two candles, and that's really what set off the basically the downside rally. Once we had broken out of that structure, that was really the spark that started getting us to come down, right? So we did close just above that. So I do think that that is a signal of strength overall, and certainly if we can hold above that area, which is going to be around, we'll call it 451.50. So as long as we hold over that, certainly the bullish momentum is going to be in full power. But they can even afford to come back and retest this prior structure. So coming back maybe into the 443 area. These are two scenarios that we can watch out for, right? We pull into here, and then we make that move for the equal highs right here, pretty much sitting at 460, we'll call it, right? So that would be one scenario that we could take a look at. Another scenario would be a little bit deeper pullback into the bottom of this prior weekly range that we were just mentioning. So we pull back to the bottom here, retest this structure, and then we make our move to the equal highs up into that 460 area, right? So this is another scenario. Now, what else could we potentially see as far as retests, or where would we also look to? Now, it's going to be the retest of the next structural breakdown that we had, and that was going to be right around here in the 433.50 area, 434. 50, anywhere in this zone. So I'm just going to mark it off here. I'm not going to mark it off with a price level yet, but we will. So anywhere in this area here, and right, this was let me get my other drawing tool, right? We had this kind of this head and shoulders pattern, right, that had played out, and then we had broken that structure, right? We had broken that structure, traded down here, came back up, retested that structure break, and then we got that last move down. So if we saw a deeper move into the into the market, a deeper pull in. And if we do in fact break under that 443.50, 433.25, right, which we had just discussed, we would be looking for a move to come back and test anywhere in this area. Really, we're also looking at these wicks here, the highs of the week from the October 9th and 16th. So we could even say 438, 437.90, anywhere in that area as well, as you can see. And that's we'll see this a little bit clearer on the when we flip over to the daily chart. But these swing highs, right? This was those October swing highs. I have been talking about them as well, and that's, remember, what we had to break over to create this new weekly uptrend that we are currently in. Okay, so another path for price to potentially take is a move out of this and either down into here and then the move up to try to make to the equal highs, or we come all the way down just a little bit deeper, and then we continue our move up. Now we could get blocked here. I mean, if we come down and pull in this far, we could get stuffed right here at this double weekly inside bars, and that could get rejected certainly. But I'm just keeping the bullish scenario fully intact here. Of course, we could chop around and get stuff there. That's also another potentiality. But the momentum has been strong, and this is what I would potentially look for. And any of these pullbacks to me are healthy and bullish still. Overall. Now, if we start to really break under the structure again, then we can talk about a different scenario unfolding. But we are not there quite yet. So we will be watching the double inside candles right here, right? Boom. I could have gone a little bit lower there. And right here. So these are the major structural retests that we would want to see, either retest and then move higher, or at least we hold, right? If we start to break, then things start to change a little bit. And certainly this is going to be the main one down in that 433.50 area, right? So that's all I've got for the weekly chart perspective. Let's throw it down into the daily chart now and see what we can take away. We can certainly see the weekly swing highs from back in October that I was mentioning before, right here. And so that's where we want to pay attention to. Now, another obviously blaring thing here on our charts is going to be this CPI gap that we had. I believe this was CPI, and that pushed us up higher. So all is well. I do think that we are also potentially setting up for at least one. Now I don't know. These gaps I think are not going to be touched for a while. Now that we've certainly created this new uptrend, but this gap is a little bit more concerning, and one that I would think would have a more of a higher probability chance of potentially being closed. Right now, we'll see. We may not even close it. We may only come halfway with the strength that the bulls have had. We might not even fill the total gap. We only fill halfway. That would be the most bullish scenario, in my opinion, if we see something like that take place. And if you see here, though, right in the middle of our gap, we do have a key area here. You can see these highs from back in when was this in from the summer rally in June, and lining up very nicely with the that's September 20th highs there. So we can say this area too, pretty much halfway into that gap. Another key level right around 444 basically, that we could see us finding a bid, and that would really be a strong sign. If the bears can't even push us down and fill the entire gap, I mean, that would be a complete fail from the sellers. So We are still, as I mentioned, just drifting up higher here. The main thing that's starting to concern me, though, a little bit. I mean, look at these readings we're starting to get on our Momo, overbought, oversold, and it is spicy up here. It can stay spicy as for as long as it wants, of course, but we are starting to get pretty extreme readings up. Where are we at? 13, about 14. I mean, it is high here, so we shall see. But we don't see any real weakness coming in. We have not seen a color change or anything, the momentum slowing down here yet, but it is something we want to keep our eye on as it develops, because it's getting very, very, very spicy. Weekly had plenty of room, for the upside, but um, I think that this would be one thing that could signify that we could be getting close to being wanting to put in either a weekly higher low or a daily higher low, with plenty of room to the downside to be afforded from the bulls, without really being in any sort of trouble whatsoever. So, but we just want to be nimble, right? This has been a kind of a tough market, in my opinion, to long, as we've just drifted higher, and you can see these candles getting real, real small on the daily here. Bulls are not particularly getting rewarded that much, and risk to reward for the long side still it's not very good, in my opinion. Especially for swings. Yeah, day trading, you can catch some moves, but, if I was a money manager, would I really want to be initiating any really major long positions here? No, not really. And, I know I have had mentioned that a few times along this rally, and we've just continued to drift up higher, but that's fine. We still want to be as nimble and tactical as possible, as we do not have the same resources, right, as hundreds of millions of dollars, AUM, right? So, all right, so let's keep it moving along here. Let's go into our main daily chart. We haven't taken a look at this in a while, see where we're sitting from these bigger supply and demand zones. And we are just sitting right up here, right around 456, basically, hanging out. And we shall see how the market will react. And as we come into this area, a few times we have had price react here, as well as the start of this gap here, where we started really kind of breaking down initially from the end of summer, right? This is when the market really started to change. So we will see, as long as we still hold over this 452. Basically, there's no real chance of seeing too much a downside, but we're sitting, we closed the short session at 455.30. So that's a $5 move, and that's fine. The main thing is that if we do start to, and I've mentioned this before on this rally, if we do start to actually see sellers show up, and buying the dip has been working. We're in a buy the dip market right now, obviously, as we've created uptrends on multiple longer time frames. But you don't want to be the last one at the party, dancing to the music as the sun is coming up and the music has stopped. Poorly timed longs here could potentially get trapped if we do see some sellers come into the market. So that's why I'm trying to be extra nimble about how I'm trading this, because I do not want to be caught on the wrong side. And, as I mentioned before, I know I've kind of said that and thrown out these walls of caution as we've moved higher. But that's, we just have to try to stay objective as far as risk to reward still. And again, day trading and swing trading are two completely different scenarios, or two different styles of trading, obviously, I should say. But yeah, we just have to be very tactful. All right, so let's move it along here. Okay, interesting. So I will keep an eye on that 456 area, as we are very close to that and coming into this next potential area of supply liquidity. Let's go back into our weekly chart here. and throw on the weekly fibs and see where we're sitting from that perspective. I'm sure we are still, yes, still above the 433.30. We've held above that. You know, we were talking in some of the previous videos. The longer that we hold over this, the more likely it is that we come in and potentially come into these equal highs. And that's sitting right around that 460 area, 459.50. So more or less 460, as we talked about that area earlier in the video. So another point of confluence there as we get into this area potentially that we just want to be very careful. And here, now that we're back on the weekly chart, I can just point out here that our Momo is free and clear of any real trouble as far as any overbought or oversold scenarios. So, all right, now let's take a look at our daily fibs. Whoops. And come into those, see if there are any levels. I'm sure we are well over everything. Well over the 23.6. Yep. Okay. So still over there. The 23.6 at 446.25, holding over that fine. And the swing high here is just really right about that same area, right? 459. 50 basically. So same level, and this is the likely scenario. But again, let's watch also. This megaphone trend line I have been monitoring. If we come back and I can extend it a little bit here, just to keep us up with. There we go. So if we do start to pull back, keep an eye on this trend line. A certain scenario we could see pulling back into and then making a move, something like that, up to the equal highs, right? Okay, let's keep it moving along here and see what else we can take away from any of our bigger picture charts. 5-year weekly. Let's take a look at these uptrends as we move along. And not too much. Everything looks fine here. We're just trading right now, obviously, within this channel. We're going to watch to see what happens if we start drifting, and I don't know, when this happens, but if we start drifting into the top of this next trend line, here you can see multiple points of confluence where we have had reactions. Here was a little look above and fail, but we'll keep an eye on any moves as we push into here, and where we could then finally, maybe we just see and then we break over, or we stay trapped and we just continue. And this is still obviously trading an uptrend, so we could just, we don't have to necessarily break out of this channel. We could just see this and drift up higher. That's another scenario. I mean, this is still going in an upward direction overall, but breaking over obviously this next channel would give us that next bigger push to the to those equal highs. So, all right. I think that's about it for the. Let's pull back on this one. So we're getting up into these bigger areas here. I think the main thing here to take away is how we're coming here from this view. All this potential supply liquidity here, right? So we'll see. So we'll keep an eye on that. That's basically from 452 to 457, 65. So we can call it 75. I mean, it's pretty much that 460, right? That whole number. All right. I think that's all that I wanted to go over as far as the bigger picture charts on SPY. Okay. So let's take a quick look at what's going on in TNX and the dollar. Okay, where I'm going to be paying attention, we had a slight move up in the 10-year here. Gapped up here, hanging out. You know, this is going to be a main area that I'm going to be watching around this 43 area, right? Let's zoom out here. This is the big retest of the big breakout, right? So we kind of had a um, we had a cup and handle type of scenario taking place here on the weekly, and it gave us this breakout, came back. But this, now we're coming back and retesting this prior structure break. We didn't quite get there. So if the 10 years starts to get below 43, this would be a positive for the market. The weekly candle, though, showing kind of a dragonfly doji, definitely showing some of a push to the upside there. You could see the gap up when we were just looking at the daily chart. But this is going to be the main area that I'm going to be watching, right? 43.30, 43. Under that, starting to accept under that, certainly under on a weekly chart, then we have the potential to see more downside here, which would would take off some pressure on equities and probably help drive us up higher. But if we can stay over, then we still have a chance, right? I could even start to maybe make a case for a bit of a falling wedge here, right? So it's really meaningless until we actually start breaking over this downtrend here. But we can start to maybe watch for this potentiality, and if we break over and come back up, this would put pressure on equities, and we could see some downside. So 43 is going to be the number to watch here on TNX. All right, now let's go into dollar land, see what's going on over there as we move right along. And what do we see here? All right, things are looking good here for the bulls as there has been continued pressure on the dollar, bring us down lower. As long as we stay under 104, basically, where do we close? 103.40 more or less. As long as we stay under 104, 104.50, there's really no cause for concern here. But if we start to recapture that area and then certainly get back over 105, that could put a little bit more pressure on equities. But as this stands, this does not look very constructive to me, and it looks like we have the potentiality of maybe coming down into the 102.50 zone. But what I am going to watch, right, I'm going to extend this right here. Okay, there we go. So what I am going to watch for potentially, and you can see here we've got 3 touches on our trend line. Well, what if we come back? Nice confluence here. If we do come in to retest this trend line, if price comes down like so, boom, like this, and then we get a move to the upward direction. Now we could just again get stuff there at the 104 area, but we want to watch out to see if we break over and then maybe come down, retest 104, and then make a move back up to 105. So there's 2 scenarios potentially for the dollar that we want to watch out for. And of course, if this is moving up, this would put pressure on the equity market. But as it stands, just from the weekly view, nothing really too concerning here for the bulls. The chart just really broke the structure and just has been really selling ever since. So yeah, this chart does not look that good. We are starting to see a little bit of an overbought condition here. Nothing too crazy. Negative 10, almost 11. Certainly could get a deeper and stay there, but we will watch that as it unfolds. So 104 is going to be that big level to see if we can start accepting. Otherwise, we're looking down for that 102.50 zone and see what happens. All right, let's move it right along here. Let's go back to the S&P. Okay, let's get into some of our other data points that we like to analyze and keep a look on. HYZ here, nothing, no real divergence that I can see. We're pushing up nicely. We're pretty much in sync with the market there, so we will watch that. I'll just be watching to see what happens if we get into that 75.25 area. It's about 25 cents higher, so it could be interesting how this reacts as we get up there. But no divergences here really to speak of, so everything is fine here in my opinion. All right, let's get back to our put to call ratio and the VIX. VIX now sitting down at 12. Oh, and look at the put to call ratio. Just, ooh, now this is interesting here. Very, very, very skewed. Now this is a little bit, this is interesting, and I'm even wondering if this is a glitch or something, because we are down at 0.08, and um, now this is skewed. Okay, this is something where normally it should be sitting up, or normal readings is up at the 74 or 70 area. All the way down here, you'd have to think there's going to be some type of snapback. It looks like everybody is severely positioned to the long side right now. This is one canary in the coal mine that we might be saying, okay, interesting. I'm actually gonna reload it because I can't believe that it's. Is this true? Ooh, okay. It looks like it's not a glitch. All right. First contrarian indicator here coming in. So we've got two now. Two potential canaries in the coal mine. One being the put call ratio and our overbought readings coming in. Okay, very interesting. All right, VIX hanging out just in these low areas here. Is it forming a base? Not really, but we're getting into a zone which is very interesting to me. Anywhere from this 1270 to 1141. Got to be very careful on longs here. We've seen certainly reactions in this area before, kind of getting a little bit in the complacency zone. So unless they can just hang it out here, if we just hang out here, that's fine. But I still would be very cautious. Look here, these deep readings here on our Momo. But bigger picture, unless we're over 15, 75, 16, there's nothing to worry about. We could get a spike and go all the way back up to that area and get rejected, or even just come up to 14, 15. It's not really going to mean anything in the bigger picture, but we definitely want to be careful on those new money longs coming this deep on the VIX. But we know that, again, unless we get over 16 or 1575, there's really nothing to worry about. So okay, a word of caution from the VIX, and P-call is definitely a potential canary in the coal mine. Okay, let's keep it moving along. We'll stay with VIX now and go and look at our internals for the VIX. And what do we have here? Now, VVIX just kind of looks like it's kind of, basing here. Again, it's looking like it's hanging out. Hasn't really done much. Could be potentially giving us a little bit of a springboard type of scenario as we hang out down here. We don't want to get too complacent. But if we start to get back over 90, we could just even make a push up into 90. But over 90, then we could potentially see a lot more volatility come in. But when we're just hanging out here, you just got to be careful. If we get down into the 75 area, we'd be very careful with the longs. That would be even more of a warning sign. This is, it's the fact that it really hasn't moved. Could be a bit of a warning as far as that springboard is concerned, but we're not down in any extreme readings here. So let's see if we do get a push either that way or that way into more complacency on the VVIX here. 9-day versus the monthly, still under zero. We're not really into the super extremes yet, but in an area where you just want to, again, be a little bit cautious of this negative 377. It's just a deep contango here in our VIX futures, and really not too much to be said. No real worries here, unless we got over that zero line. So this is all fine, just deep, deep in the negative there. So, all right, let's keep it moving around here. Let's take a look at the breadth overall, new highs versus new lows. Okay. Now, as you can see, we're hanging out here. Now, this is a little bit interesting. I'm going to zoom in. We've kind of made, a higher high here, right? If we look in, hopefully, guys, increase the quality, but if you look in, okay, here we go. Okay, made our higher high, pulled back just a little bit for a little higher low. And then here we've got another higher high, right? Because we are over this 454.20, we'll call it, right? But what has not happened here? We have not made a higher high in the breadth. Okay, so we would think that this would be, what do we got here, an 84 reading? You would think that this would be up over 110. Okay, another possible divergence, well, it is a divergence, another possible canary in the coal mine is showing a bit of caution as we not seeing this in sync, right? We would want to had seen this above that previous high, which we did not get. But from the bigger picture perspective, we're still over zero. So as long as we're still over zero, that's fine. Nothing really too crazy, but there is a divergence. It can afford to come back, and we'll see what happens. But we'll come back and retest zero. That gives us our little pullback in the market, maybe that bigger picture, higher low, and then we go ahead and along our way. But the fact that we have this divergence here, another canary in the coal mine that we want to watch out for here on our new highs versus new lows. Let's keep it moving right along and take a look at our SPX A 50R and 200R. How many stocks are trading above the 50 period moving average and the 200 period moving average? Okay, everything is looking good here, making higher highs, coming up into the 74 area. So we will keep an eye on that as we're at 75% of all stocks, and just look how little how little time it took, right? Almost a month for us to be, only 14% of the stocks trading above their 50, now to 75% of their stocks, but continuing to make a higher high here, just like the rest of the market. So no real divergence to speak of here. Just the only thing is just that we're coming into the 75 area where we've seen some issues before. So, but no divergences here. Everything looking good. Same thing with the 200. The 200R, we're above the 50% line by 5%. Everything's fine here. We could afford to come into 50 and then bounce up, but no divergences. Everything is fine from this point of view. All right, let's keep it moving along, and let's take a look at, I think we got mostly everything. All right, we're just going to do a little Dow, a little peek here at the transports, and the Dow for some more potential. canary in the coal mines. And let's see what we have. The Dow continuing here to make higher highs, and we're still having that divergence here in the transports. We came in, made those equal highs right around that 15,230 here, have not been able to break over. So we do have another divergence here between the transports and the Dow. We would want to see both of these in sync, making a new higher high. We do not have that. So there is another potential canary in the coal mine, and this has been one that we have been watching for the last few videos. So unless we really start to get some closes over basically 15,250, we will still have a divergence as everything. I mean, look how far we broke over these highs from the 16th back, a long time ago compared to the transports never doing it. We want to see these in sync. They're not in sync. Another divergence that we want to keep an eye on as we've gotten stuffed right there, right there at those equal highs. So there's a couple of interesting divergences that are worth taking note of here in the market. All right, I think that that's all our internal data points that we like to look at. So let's start to get a little bit more granular. Yep, we are done here. Let's start to get a little bit more granular and move into some day trading fibs. And actually, I might have not updated them. I think, oh, I did. All right. But I think that this is actually, I'm going to keep it like this. I'm going to update it. But what I think would be important to watch overall, because this is based on the last swing high. As long as we hold over 450, 454.75, that's our last swing high from last week. So as long as we hold over that, there's really no reason to get too bearish. Obviously, you can have some potential intraday type of scalps in little day trades, but until we break under that and really hold under, there's no real cause for concern from the smaller time frame perspective. If we do start to accept under that price, and then we could potentially look for moves back down into the basically 454 area here. And then if we do trade under that, we'll be looking basically another dollar down into 453.10, 453.15, that area here. So, but if we do start to accept and take out, we can call it 455.80, if you want to call it 456 to be safe. We start to get over these areas here, and we'll just mark it off so we can have it. Well, we've got this little wick here, so we'll keep that up. So the next area that we really need to see price push through is going to be pretty much that 455.75 to 456.36, thereabouts. We start getting over that, then we can continue our move to the upside. We also want to watch out, though, for that potential choppy price action, right? This could just be also what's in store for a little bit as we either distribute here and find out that there's no more inventory left, or we actually, break up above and kind of cause another short squeeze. But it's all going to depend on whether really we can get over this kind of area. So if you're a range trader, this could be a blessing here, because really you can just, trade. You can just trade this back and forth ping pong action. You get up there, you short, you get down here, you long, and so on and so forth. But of course, you don't want to overtrade. One or two trades, smaller size, just get in, get out, and just be careful. Because a lot of us, have been used to that kind of straight up trending market. Now, as we're kind of going into, again, this potential balance, trying to find acceptance up at these new higher prices. The market, it trades differently, right? So you don't get the same type of moves, and you just want to be cautious and not get chopped up and not get too overly committed on one direction, as that balance type of price action and range consolidation can lead to a lot of fake outs, right? And on both sides, right? You can see here, even on, on this hourly chart here, it looked like we were going to break up below and get really selling, and boom, where do we bounce? Right here, that 254, the 454 happened again here, right? And here was a fake break to the upside, right? Okay, so let's just be cognizant of that. Okay, let's close it up here and get into some of our balance zones, see what we can take away from that, and then we will go ahead and enjoy the rest of the weekend. I hope you guys have been enjoying the video as well as the time away from the market. Okay, so what do we have here? What levels are we going to be watching? All right, so we've got this kind of balance zone that, and actually I don't have my half. Okay. Um, okay, so as long as we still trade over 455, right? Give it a little bit of room there, of course, but more or less over 455, still looking for those longs to potentially come up to 456, 456.45. Over that, then we are looking a little bit higher up into the 457 area, right? And then over that, maybe 457.45, and then 458. Um, but under 455, we could see trades back down into 454, 453.72, testing the lower part of this balance here, 453.40. Yes, we can consider some longs in that area as well as we come down. If we trade into here, and then we look for longs back into the half gap. And if we do just trade inside of this balance range, right, we could potentially just short it there. But of course, if we break over, then we'll be looking for trades back up this way. However, things get more interesting if we start to trade under 453.40, start really accepting down into that area, then we can see moves back into this area of price action that we saw last week down into the 450 240 area right here, and this area we could potentially look to long. Gotta again watch out for these little fake outs here, but that is an area I will be watching as well. If we do catch a bid there, we could see it break down to here and then a pushback up here, and then I don't know, potential short there for the equal lows, or the move all the way back down into the next area of balance, which would take us down into 451.40 basically to 451, anywhere in that area. Again, nice area where you could potentially look for a long trade, but start accepting underneath that 451. Then we're looking for another dollar move down to 450. Okay, whole number there, definitely, certainly, again, a nice long zone at the half gap, whole number. So you could see a potential move from there as well. I don't know, of course, and we don't know. We start to take and trim some here at the top of this balance, looking for a move back up to 452, 452.40. But if it gets rejected, you could, and you're bearish, you could look at that short side trade there, back down into the equal lows, right? So there are some levels that I will be watching from this perspective. And it's gonna about wrap it up for me. So some interesting things going on the in the charts. Remember, though, we're gonna have a plan for both sides, the long and the short side, right? We do not try to get overly biased in either direction, and we have our plans set up beforehand. And I hope that this is what helps you kind of formulate that plan for yourself, and helps you navigate the market. So remember, a prepared trader is a profitable trader. Trade your plan your trade. Again, happy Thanksgiving to everybody. Hope everybody had a great one. And again, I'm so thankful for all my listeners and supporters. If you've liked this video, smash that like button. Where do you think we're heading? You can certainly give me your opinions. I'd love to hear them in the comments. I try to reply to all of them. I certainly read all of them. But again, I hope you found this helpful. Thanks so much for joining me, and have a great rest of your weekend. All right, take care.